Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we had some individual stocks really making some moves, like IBM, Southwest Airlines with LUV, and some others we're going to show you here in just a few minutes. But really, the indices were really basically flat today. Not a lot of volatility on the S&P 500, and really started chopping sideways, forming a doji candle today on the daily chart. Let's jump into the market summary, check out what's going on and moving today. Here we've got Dow Jones down 0.4%, NASDAQ up 0.34%, S&P 500 flat. As I've said, you can't get any more of a doji than flat as can be. U.S. oil up 1.31%, gold down 0.48%, Bitcoin down up 0.29%, still chopping around in that consolidation area that we looked at earlier today. Now into the S&P 500 heat map, we see here NVIDIA had a nice recovery, pushed higher, 1.72%. AVGO, again, still chopping around near the top of its charts. Google pushed up, ended up 1.21% on the day after earnings. Amazon up 1.7%. Walmart 1.2%. We've got a lot of green as far as some of the big players, which are really keeping the markets afloat. But then we look over here, Tesla slammed today, down 7.86%. Potentially saying that their future quarters could be facing some challenges with the eradication of the tax credits for purchasing EV vehicles. So very big news and change there for Tesla. However, Tesla's chart is still okay. We'll check out the S&P 500 up next. Now, guys, look, I've been talking about this for a long time. I know it may sound like a broken record, all right? But when you look at this chart, we're right here into resistance. Now, we've been into resistance for quite a while with some of these trend lines. And typically, whenever these trend lines try to break, they will retrace. And that's what we're doing right now on this chart. We tried to break, did not happen. Now we're just trailing up right here on this trend line. As I've said before, the inclining parallel channel right here around 6,400 is that next significant level of resistance, because we have resistance here as well as right above it. But anyway, getting into a parallel is going to be difficult for it too. Now let's back out on the weekly so I give you a general sense of what's going on. Anytime we have a long-term parallel channel like this and we do get a break, we typically see a retrace of price action to that same trend line, or in this instance, a parallel of where it broke. We're about to do that, but we're all the way up here on the charts. So you can see how this is a little bit confusing. We've had such a huge run. We should have pullbacks along this run. There's been 0.5% pullback. There hasn't been really any good pullbacks along this whole run. Now we're retracing the scene of the crime. This is looking like it's going to be the area for the sell-off. Is it going to be tariff news? Is it going to be a straw that breaks the camel's back? Regardless of whatever it is, the RSI is up here near 70 on the weekly. On the daily, we're over 70. These are just showing signs of being overbought. A simple 5% pullback will pull us right here into the top end of these pivots. So that's what I'm looking for with this move up into the into this inclining parallel channel. Lots of incredible price movement floating us up on the spiders. And today, putting in that doji candle, which is an indecision candle. There's equal sellers as there are buyers. But again, I forewarn all of this. Even though we are approaching this resistance, we're in July, we're in summer months, which typically have lower volume. So any selling pressure likely will get bought up and then start curling back up. Even if we have a 5% drop, we'll likely start pushing higher back on the charts after that drop until the big volume comes in, likely in September or October. Into the Qs. The Qs here we see now we're starting to poke above these two trend lines that we've been talking about for the last several days, squeezing price. Keeping in mind, we're not closing at a new highs on the Qs, so not too much is changing on this chart. Next up, the SMH. SMH, as you see here, still has the daily topping tail intact on the S&P 500. We do not have that intact any longer, but this index is the one that leads the way. We have a topping tail, a slight move down, and somewhat still inside bearish consolidation. I would much rather see a larger drop and then see that bearish consolidation, because ultimately this can all be construed for consolidation too, except for, again, we're right back returning to the scene of the crime where the SMH has not yet confirmed back inside of this inclining parallel channel. Next up, IWM. Now, IWM did give up a little bit of its gains, did not get a confirming move above this consolidation today. So we're going to have to kick the can down the road to tomorrow or potentially next week. All in all, looks like IWM is still in good shape. We're closing the day here at 223.50, resistance up top 229.30, support down here at 221.35. Next up, Bitcoin. Now, Bitcoin, we touched on this morning on the game plan. Notice here with the daily topping tail still intact. Then we've had a move down and consolidation. Near term, that's bearish consolidation. If this wasn't here, if this was not a topping tail, let's just say we came up here, closed right in this area and did not have a topping tail, this would be bullish consolidation. So a little bit of mixed signals here on the chart of Bitcoin. Ultimately, with this move up, I do anticipate now it hit the top end of the parallel. We should start coming down. Price action and target still hasn't changed to 113.278. Next up, gold now pulling back comfortably inside this wedge pattern. Next area of support for it down here at 32.86. We'll watch to see if we reattack this area of the declining trend line, as that then will be the fourth attempt to come up and break through this area, which would then weaken it. But ultimately, no trade there on gold or trade set up at this current state. Into silver, silver had some slight pullback yesterday. Notice the doji candle too, right here on top, much like we're seeing on the S&P 500, usually shows there's indecision. And when we're moving up, then create a doji, that then does shift probabilities for some sort of slight pullback the next day, like what we're seeing here in silver. All in all, silver still hanging out well at the top end of this trend line. Should we break above and push higher? 41.66 is the target. If we break beneath 36.58 and 34.86 are the major support levels on silver. Into oil. Oil had a nice pop up today. That is to be understood if you know anything about time counts. And if you don't, do yourself a favor. Check out my course, Mastering the Overnight Trade, the sleeper hold. That's the first module I go through. A lot of trading, maybe TV shows or even YouTube shows you hear don't talk about time, and they're doing themselves a disservice. Time is so important in calculating trades, especially in time counts. These things are repetitive. It's cyclical in nature. It happens and repeats on the charts. It helps you get the key to unlock the strategies to really figure out the flow and patterns that present themselves on the charts. In addition, you get trend line support, you get trade setups. It's just a no-brainer. Guys, do yourself a favor, check that out. Make yourselves a better trader. All right, so back into U.S. oil, still bearish consolidation. Ultimate support for this bearish consolidation and break would be 63.86. Target for that break would be down here at the $60 price range. Into Nat Gas. Nat Gas did try to poke up a little bit today, retested this inclining trend line right here, did not close above, and since it's closing right down here near the bottom, we'll see if we start forming a bear flag over the coming days, in which case the support area of 255 would be on the horizon. Into the 10-year yield. 10-year yield also did poke up a little bit today, but then retreated by the end of the day. So we have potentially, now this is tentative, we potentially have a right shoulder being formed here on this inverse head and shoulders, with the left shoulder here, the head here, and then the right shoulder here. So we potentially still could be on the lookout for a break above. 10 years not giving us any signs of a definitive pullback on this chart. So we'll be watching this Friday coming into Monday. Next up, LUV. I covered this morning, and I highlighted the fact we have an inverse head and shoulders pattern. And look at the price today, just plunged through that neckline. Closing today down here at $33.26. Notice it did get a great pop up right here on the support of $32.56 and continued moving up above that $33 area. So it was a nice recovery towards the end of the day. However, this break of this inverse head and shoulders pattern takes away this measured move of $45.77. So unfortunate for LUV at the moment. We'll see what sort of selling pressure persists tomorrow, if there is any more. Next area support down at 30.89. This now support turns into resistance for a move back up. That area is $34.29. Next up, we've got Wing. Now, Wing is a smaller cap stock. It was all the rave right back here in June, pushing up to, you see this high pivot that was made right around $385 on the chart. Last earnings season, you can see they excelled and ripped higher, and now they're starting to retrace back in. They had fantastic earnings, talking about multiple levels of expansion, even internationally too. So the selling pressure here looks like a take profit opportunity, as a lot of the sentiment has waned here in Wingstop, but the fundamentals and the structure of their business is still the same. So it was a very nice sell-off today. This could climax. We're very near this support at 296.07. Watch for that to potentially get tagged tomorrow. If we do sell further, notice I've got a wedge pattern here on the charts. This area would then be support, this inclining trend line at 276.21. Notice how that's derived from all the way back here in June of 2022, strung through this pivot, and then we had a pierce down here through that heavy selling time frame earlier this year, and that ended in April. And then now we've had potentially, with price coming back down, a chance to revisit that trend line. That would be a great area to buy. Very low risk if it gets down there. What I recommend, probably staggering your entries, get a good pierce of this 300, and then start adding down here towards that support zone. Next up, on semiconductors. Now, On had a nice breakout. We didn't have any earnings to report on. However, you can see here, we were down 7% today. We actually fell straight into this gap fill, got a nice bounce up. But I wanted to point out, we had a breakout, a confirmed breakout here on. Now that breakout has failed. Usually we have the biggest moves on failed moves. However, on the semiconductor play, one of the main reasons they are selling, their CEO is no longer with the company, and they're looking for a replacement for the CEO. So there could be some investors that, with that uncertainty, back to uncertainty, guys, talked about that yesterday. Investors don't like uncertainty. So it could be a lot of those investors who are just looking to exit. We'll see if this is a quick dip. Ultimately, we want to see confirmation of the breakdown. We want to see price move down lower tomorrow and confirm under this candle, making this trend line then resistance going back up. I've seen countless times of fake outs, bull traps, bear traps. Right now, this move is a confirmed move higher. We need to see now a confirmed break beneath. If we poke right back up, price can simply keep going higher, because this area is not resistance at the current moment, right at $56.88. So be watching on semiconductor. If it does sell and continue down further, the next area of support's not far away, right here at $52.39. Keep in mind, they've got earnings coming up on August 4th. So this is a very interesting play. Tomorrow will provide a better picture, whether we confirm this breakdown or if we just have just a quick test candle dip down into this underlying area and then a return back above this trend line. Very interesting chart right here on. Next up, MBLY. Now, MBLY did also have an inverse head and shoulders pattern that it broke out and confirmed above, and has since retraced down to the neckline and has broken that neckline, thus getting rid of the measured move up there on the charts. It's literally off the charts. But you see here, price came down, tagged the support area at $14.87, and has since bounced up ever so slightly there, closing the day at $15.42. Now that we have broken down from this inverse head and shoulders pattern, the next area of support is going to be $13.42 for another attempt to break up above this now declining trend line on the charts. Next up, we've got Dow. Now, Dow, look at this big drop on DOW. Big drop of 17.45%. Now, they did have earnings, and you can see here it was a double miss. So you can understand why price is coming down. But to add fuel to the fire of the selling pressure, they reduced their dividend paying by 50%. Guys, that's a big deal for a lot of people and investors that are attracted to certain stocks that only pay dividends. So a lot of people heard that news as far as reducing the dividend payout, and they exited that position. But keep in mind, right down here, all-time lows on Dow, $21.97. This area could be a great buying opportunity, regardless of the bad news. Usually, when you have exponentially bad news and everybody runs for the exits, that can be a great buying opportunity, folks. When no one wants it, that's generally when I am interested in getting into a play, not going all in, but just getting in, because any whiff of good news will send that stock right back up on the charts. If I scroll back out a little bit further on this chart, you can see we've got this declining trend line originating from this pivot here of October 14th of 2022, strung out to this pivot low that occurred here in April of 2025. and we're about to retest that trend line. That would be a third hit, and that would be a great buying opportunity. Watch price action and how it gets into that trend line with this understanding that the all-time lows isn't much further at $21.97. Next up, Chipotle. Chipotle, we covered this early this morning. They did post earnings yesterday afternoon. They did have decent earnings. They had a mixed bag. They missed on revenue, but they hit on earnings per share. But ultimately, they said that the consumer sentiment last quarter had weakened at their restaurants. So we do see the stock price dropping down significantly today, closing 13.34% lower on the charts. It blew through this first support in pre-market hours, and then since has caught support right here at these pivots today. But ultimately, the next level of support, should selling pressure continue, is at $44.46. But notice this declining trend line, folks, and this declining parallel. This is a beautiful longer-term declining parallel channel. Now it's been hit several times on the bottom end, but notice this area too. This area has another great level of support, this longer-term trend line that is divided price up on this chart. Right here, I think would be a fantastic opportunity in the $42 down to $41 range on Chipotle for a long play. And also notice on the daily chart, we're coming down, poking through 30. So we may not get down that low. So that's why I've got these support levels listed for anybody interested in investing in Chipotle. Can start snagging some up here and then adding to the position as we continue lower on the daily RSI. Next up, and lastly, we've got FTI Technip. Now, this is a company based out of the Netherlands, as you see here. Or pardon me, that's a different company. This is out of Texas. This is an oil company based out of Texas. Great news on their earnings today. We pushed up 18.02% and 2.04% for revenue. Awesome. Good news for them, but yet they're running right into near-term resistance. This is not all-time highs. If we go back out onto the monthly chart, you can see we're quite a bit ways off of the all-time highs, but in the near term, we're extended. Matter of fact, we're overextended. Divergence is taking place here on the monthly chart, and it's a beautiful move up here into resistance. So watch this trend line tomorrow. If price stutters around this area or even consolidates, that would be ideal for any FTI bulls. Since we did push up so far so fast, let's get some consolidation and then another attempt to break through that trend line. That way it will clear the door for the next level of resistance at $41.92. All right, guys, that wraps up Trading the Close. This is going to be the last episode for this week. I'll be back on Monday afternoon. Hope you guys have a fantastic weekend. Until then, I'll see you guys on the charts. Have a good one.
Hey guys, Lawton here with Verified Investing, and I am so excited to announce our brand new partnership with Kinesis. Kinesis is a revolutionary concept. They're able to create cryptocurrency that's tied directly to gold and silver in the form of KAU and KAG. You can send in your gold or silver and convert that directly into tradable currency. Another thing you can do is buy their gold. You can convert your US dollars or whatever currency you want into KAU and KAG. You can withdraw that and actually receive physical gold and physical silver. This is absolutely revolutionary. We know with how volatile everything is, it's important to have things grounded in silver and gold, and Kinesis is a great way to do that without the risk of having to go out and buy gold and silver bars yourself. They also have a trading platform directly linked with TradingView that I advise you all to check out. Thank you so much to Kinesis for sponsoring Verified Investing.